Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, March the 3rd, 2016. My name is Doug McKay. I am the founder and head moderator of Quantum Leap Futures. Each morning we come together to take a look at the market, macro to micro, the structure of the market, then drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're interested in coming in and checking it out, I'll put up my contact information, but before I do, please read through the disclaimer. Nobody here at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you do want to check us out, please send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We're a group of retail traders that get together live each day and trade together. You will need a Skype account. It's easy to open, quick to do. Send me a Skype request to Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, if you like this video, if you're watching it on YouTube, there is over 300 days of these pre-market sessions. You can go and take a look at our past performance. Just do a search on YouTube under Quantum Leap Futures. If you like what I do, please follow me on Twitter at Crazy2. Okay, so let's first take a look at the news. So this morning we had unemployment claims came out slightly higher than expected, 278 versus 271. Revised non-farm came out minus 2.2 versus minus 3.2, a little bit better. And the revised unit labor cost came out at 3.3 versus 4.8. We do have news at 9:45 Eastern and 10 Eastern. We've got final PMI. We've got ISM non-manufacturing PMI at 10, factory orders, and then we've got natural gas at 10:30. So we've got a fair amount of news this morning. The ISM non-manufacturing PMI, of course, being the big news and the one that could move the market. So be careful within the first 30 minutes of the market. Yesterday, we had a hypothesis that we were going to get a rotational day with an upside bias towards the 1985-1986 target. I was looking for them to come down into the 68 down to the 64.50 to find buyers and rotate up through to go hit that target. Very rotational, really big rotations. We only got down to the 66.25 before they found buyers, and then we held that 70.25 level, and then worked our way up. And I was looking for a neutral day with a late day probe up into the 85-86 area. We didn't quite get there in the RTH session, but they did take it up and hit our targets. I think the overnight high is 87.75, 2 ticks above our next big target that we had, and we'll talk about that in just a couple minutes. So it wasn't it was a frustrating day because it was so rotational, but I finally eked out, and it was an okay day. I think I had 17, 18 points or something like that overall. I had a great Globex, so that made up for it altogether. Going to the trend scenario, I like to start my day each morning with a basic candlestick chart with a 9 EMA, 20 SMA. I start with the monthly and work my way down. It's a routine that I've done for years. Just want to know where we are within the context of the trends in the different time frames. We've had a beautiful upward trend on the monthly. We've challenged it and violated it. January and February were bearish months. A doji for February, and now we're coming up and testing the 9 from below. In March, so far March is a positive month. Our month open is 1928, and we're working our way back towards that 2000. But the overall trend on the monthly has been violated. On the weekly, we had the start of a downward trend. They tried to take it back and failed, came back down, and then now they're taking it back, and we're testing the 20 from below at the 89 level. So we are challenging what was the start of a downward trend, and we will violate it if we get above the 20 SMA. On the daily, shows that the smaller time frames as we move down are working towards a start of a new upward trend. We've got slope and separation, a little bit of a technical gap going on here on the daily. So we'll probably get some sideways actions or a little bit of a pullback. But remember, keep in mind that this is a daily time frame, and you got to think in terms of what time frame on technical gaps and candlestick patterns. So we do have the start of a strong upward trend on the daily. On the 4-hour, we've been trending up, consolidating, trending, consolidating, and continuation. We've got good slope and separation. Price is paralleling the 9 fairly nicely right now, so the trend is still up on the 4-hour. On the 1-hour, we're starting to get a little bit of a top out, a little bit of a head and shoulder pattern, setting up here. We've come below the 9 and the 20 right now, so we see some weakness coming in on the 1-hour. On the 30-minute, we are again getting this bit of a head and shoulder topping pattern, and we are below the 9 and the 20. We're starting to get a little bit of slope and separation. I still think we're going to try to tag into that 2000, but we might get a bit of a pullback today, and I'll show you where I'm looking for pullbacks. Moving down to the 15-minute, you can see that we're again in a downward start of a downward trend. We're getting some separation, not so much slope yet. So we are seeing some weakness coming in. And in the 5-minute, you can see we've got this start of this downward trend with slope and separation, but we've challenged it here but failed to violate, and we're back below the 9, so we could see continuation to the downside right now. Moving over to the bigger picture. So we had fallen out of this balance up here, tried to hold value once we fell out of value, and that's where that 87.50 came from. We could not hold value. We gapped down, and then we worked our way, and we created a balance zone down here in this microcomposite that runs from January 7th through to the breakout day on Monday. Our value area high is 36.50. Our value area low is 59.50. They came up and they accepted value here at the 1923, gapped up, broke out, tried to hold value here at 49. They accepted that value, and then they've come up, and yesterday and Monday created a new small balance area with a microcomposite at 74.25, and overnight we've gone up and tested the 87.50. The sellers stepped in as we would expect. The market's broken out of balance. It's in price discovery. It's seeking sellers. What did it find sellers? It found sellers at the area where they tried to hold value the last time. Since then, we've worked our way down a bit. We're at a very critical area right now. If you guys remember the other night in Globex when we were trading at 82 level, and then last night again that 82 level, and yesterday during the RTH, how important and how resistance was at that 82 before we popped up. Look for support here at the 82 level. If we don't find support at the 82, we've got liquidity down between 80 and 78.75, and if they can't hold that area, I'd be looking for them to come back, test the price acceptance here at 74, and try to pick up responsive buyers down here, and then make a continuation push up into the 87.50. The move up in the Globex does not constitute a gap or a naked VPOC close. So this gap at 85.50 and the naked VPOC at 80, what is it at? The VPOC is 85.50, the gap is 86, and the microcomposite VPOC is at 87.25. So those areas remain open until we close them in the RTH. So my main hypothesis is geared around this 82. I'm looking for a move back to test this 74, possibly down to 70.50. 67.75 becomes our key line in the sand, looking for responsive buyers somewhere between these three levels, and then a move up through yesterday's range high to take out the 3 key levels that we've got up here, try to hold value, test the other side of the balance up to the CLVN at 91.75, and if we can break 91.75, a push through to 96.50 and a probe into testing that 2000. If they cannot hold 67.75, I'd be looking for them to come down and work their way down and get a rotational day down below 67.75 and this 52.25, possibly 49. If I add the Monday breakout candle, the 4-day microcomposite VPOC shifts to the 52.50. I don't add a breakout candle. I want to know the 49, but I'm going to recognize that there is that level, and I've got the CHVN to show it to me at 52.25. Anything below 41, we lose all support, and we will make a bigger move down towards this 23 again and get back inside of this balance that we just broke out of. So let's take a look at the overnight session. We've got a double distribution on the overnight. Oh crap, forgot to take my levels off from yesterday. Just let me do this. We did have a neutral day yesterday. It wasn't quite a neutral extreme, but you could make an argument for it. So remember that a neutral often is followed by a neutral day. I'm looking for a rotational day today, and I'm looking for the IB to be broken on both sides. Okay, so overnight we have a move up to the overnight high at 87.75. We have a overnight low down at 78.50, which is basically our value area high from yesterday. Our VPOC overnight is 82, right where we're trading, and right above. I mean, this is going to be a critical area, this 82, and I'm going to be using the LVN and below the 81.75 for a key trade area this morning. Below it, I'm looking for a move down to take out the overnight low, possibly a move below. I'll look for acceleration below the value area high and into the 74, and somewhere between the 74 and the 67.75, I'm looking for responsive buyers to step in and take us up. And I'm going to be using the value area low, and then another one down here at the range low, but I'm going to use 65.50. Actually, I'm going to use 74.75. And then all our areas below that all remain the same. Our 20-day ATR is running at 37.16. So off of the high overnight at 1987.75 minus 37.16, that takes us down to a daily downside ATR target of 1950.50. Off of the bottom overnight at 1978.50 plus 37.16, that takes us up to 2015. So this is important that we have range capabilities up into the 2015-75 area and up near this 17 naked VPOC. our weekly range low, we're basically right at and close to our weekly ATR targets. Thursday, we're only, 13, 14 points away from our weekly ATR upside target. I don't think our weekly downside target is an issue anymore. We could be seeing critical mass. Right now, our open of the month is 1928. We have 2 days left of the our week. I gotta bring this up so I can see it, because I gotta just calculate it. Our week low right now is down at 1920.75. We got 2 days left, today and tomorrow for our week. So 37.16 times 2 is 74.32. Off of the low of the week at the open of the week at 1943. Our weekly critical mass doesn't kick in until 2017, and that's right up to near our daily ATR target. So I think that we still have a probability of coming up here and testing that. If we get above 17, then we see critical mass kick in, and we could see a bigger pop into the 2000s. It's not my number one hypothesis. So those are the numbers below. Let's take a look at the above. Obviously, we've got the double distribution with the 84 overnight value area high and the LVN between the double distribution, plus the range high from the RTH session. Obviously, above 84, you can use the 84.75, but I don't think this is a strong high. So I'm going to use the LVN from overnight. Above 84, I'm looking for a pop into the 85.50, 86, and a takeout of the next big target above, and the 87.75. All the numbers remain the same above. Above the 91, which is our key line in the sand above, we're looking for a move up into the 96.50 and a test of the weekly ATR, a poke into the 2000s. Above the 2003.25 is where I expect to find the first resistance in the test of the 2000s, but look for the rule of 10 and a move up into this 08.25, the rule of 10, up into the 2010, and we've got a naked close at 12, a daily upside ATR target 15 and 17. Let's just take a look at the composite once we get up in that area. Remember that the overall VPOC for this balance area, if we get up into this balance area, is all the way up here. But take a look at where the microcomposite value area low is. It's right at that 17. So I'm expecting some resistance to come in at 17. If we don't see the resistance come in at the 17, which is our next major resistance, then I would look for a pop to 22. So we'll take a look at this upper area. There's 19. The next one, big one, is going to be this 37.50. And I'm going to use just above the 36.50. And then 43, and I don't think we're going to get that big of a move today, so I don't think we have to worry about above. So again, my main hypothesis is either to come down into this area, find responsive, I expect to chop around this area on the open, come down, find buyers between 74 and 67.75, or 67.75. I'm going to shift that down to 64.75, and 64.75 is going to be our key line in the sand below. Find buyers somewhere between here, and I'm going to mark that 67.75 down here because it is an important area. But we might dip below it just to to check the 66.25, and then a move up through into the overnight high. The other hypothesis is basically in reverse. A move up on the open, finding responsive sellers down here or up here at the 87, 75, 88 area, maybe even a test of the 91, and then responsive sellers to step in and a move back down through and down into that 74 area. So I don't know which way is going to play out first. I think we come down first and then come up. It's going to be very important if we get an open swing that does not take out the overnight high, and we get down below the 78 level. If that happens and we don't take out the overnight high by the time we get below 78, then I think we come down and we take out that we take out the overnight low and take out the 74.50 and come back and test that microcomposite VPOC, the price acceptance that we just held. Sorry, I'm losing my voice. All right, so just taking a look at the Keltner. We are currently sitting right on the Keltner center line, sitting right there at the 81.75. A move up to test the upper Keltner takes us up to 84.75 and a test of the range high. A move below it takes us down to that 78.75. I mean, beautiful symmetry against the market structure. Gold. On gold chart. As I've been saying, expecting gold to continue to chop around this area, this distribution zone. The key level right now is 1233.70 below and 1253. Same as yesterday, nothing changes. I think we're just going to chop in this area as we build balance. What I want to do is I want to draw a profile here in this balance area. See, so you can see that the microcomposite VPOC for where we're basing here is right at the CLVN, the 34, the key line. If we get below that, look for them to test the 27, but I would really look for them to come down to the 21. And anything below 21, I think we make a bigger move down towards 1210. Just make sure you're funded and running free down before you get to the 1216.60 area. We've got the value area low on both these larger time frames and smaller time frame microcomposites. Anyway, that's going to complete our pre-market session. Sorry I'm rushing, but I did have an appointment this morning. I don't know if I'm going to lose my voice this morning. As always, trade well, trade safe, and we'll catch you on the flip side.